So we discuss about what is the foreign exchange or the foreign exchange rate, what's the definition of it, and then some jargons to carry on or move forward. First, key thing we have to identify the difference between base currency and counter currency. Can you remember what does it mean by base currency and what does it mean by counter currency?
So base currency is the where currency we assume calculate as a 1 unit of currency.
Yes, that's the currency. That's the currency we consider as 1 unit, yes, of which the price is given in another currency. Then the counter currency.
Counter currency is where 1 unit of base currency is quoted.
Yes. Price of the other currency is given in terms of the counter currency. Yes, you have the idea. Then when we write currency pairs like this, or maybe like this, whatever the way, the left hand side we write the base currency, and the right hand side it is the counter currency. That's how we write. Then we discuss about another two concepts: direct quote and indirect quote. What's the difference?
The direct quote is the quote where the US dollar considered as a base currency.
Yes. In general, that's the idea. Indirect quote, base currency is US dollar. In indirect quote, USD is the counter currency. Now you can see in this definition, direct quote or indirect quote, you always talk about dollar, US dollar. Then all the exchange rates are expressed against US dollar. But there can be currency pairs which does not involve US dollar. Euro, GBP. So no dollar involvement here in this currency pair. Or maybe JPY LKR or INR LKR. Likewise. So no dollar is appearing in these currency pairs. There can be many. Euro, CH, GBP, AUD, AUD, JPY. What? We can create many pairs like this because there are a lot of currencies in the world. So in any pair, the dollar is not appear. What do we call this type of pairs or the exchange rates of this sort of currency pairs?
Cross currency.
We call them as cross currency. So that's what we discussed or started to discuss last week. Remember? Then, if I remember correctly, I gave some homework. Correct?
Yes, sir.
First thing, tell me, can you see the board on the proper side? Oh, the letters you can see in the proper way.
Yes, but the bottom of the whiteboard not.
You can't
Okay.
see that.
Yeah, can see.
Okay. Now tell me, I cannot remember the numbers for the currency pairs. Can you tell me what were the examples or the questions that I gave to you?
USD JPY is equal to
USD JPY
is equal to 103 rupees and 52 cents.
52 cents. Then
And Euro USD
Euro
is
USD
equal to 1.2173. And another one is also there. Question is, what is Euro JPY?
Okay, yes. What is the exchange rate of Euro JPY? I think I gave another.
Yeah. USD JPY is equal to 103 point same thing. Yeah. And USD LKR is 201 and 15 cents.
15.
Yeah. There we can't see that bottom.
You can't see this part.
Yeah. There are some kind of things are appearing. Yeah.
So if you can put the board back, then we can see the upside of the board.
Now, if you guys can open the participants panel, so it will like give you the full board. So it will take out, pop out.
Yeah. USD LKR is equal to 201 15 cents. And
Now you
question
can
is,
see.
yeah, can see. Question is, what is JPY LKR?
Anything else?
That's all.
That's all. Okay. What are the answers?
So JP by LKR 1.9431.
Now can you see the board properly?
Can see.
JP by LKR, what's the rate?
1.9431.
1.9131.
9431.
Euro JPY
125.99. 125.99 cents.
125.99.
99.
Okay. How did you get that? That's the important thing. There may be calculation errors, but I need the method whether you got it correct. What does this mean? $1 equals 103.52 JPY. The second one, €1 equals 1.2173 USD. Then if $1 equals 103.52, what is the value of 1.2173 USDs in yen, which is equal to €1, isn't it? Is it correct? €1 equals 1.2173 dollars. You know the value of $1 in terms of yen. Then what is the value of this much of dollars in terms of yen? How do you get it?
We have to multiply the
Yes,
JPY rate by USD.
it's like
1.273.
it's like if a 1 kilo of sugar is 125 rupees, what's the price of 1.5 kilos? Same thing. So what you have to do, multiply 1.2173 by 103.52. Then I assume that you get this 125.9.
I got 126.014.
So did you do the same thing or
Yeah, same thing.
same thing? Then
Yes, that answer is correct. 126.101.
126.01, yes. Is the answer. So remember, so you can check it. So $1 is 103.52. Then the value of more than $1 should be more than this. You cannot get an answer less than 103. It should be more than this. So therefore, even the previous one and this one are possible answers. That's true, but this is the correct answer. I don't know how do you get that 125 thing. Is it clear?
Yes, sir.
Now the other one, JPY LKR. How do you get this one? May I delete this?
Okay, sir.
How do you get this one? Again, $1 equals 103.52 JPY and $1 equals 201.15 LKR. Then what do we have to find? What's the value of 1 yen in terms of LKR? $1 equals 103.52. $1 equals 201.15. What does it mean? 103.52 yen equals to 201.15 LKR. Correct? This is the value of dollar in terms of yen. This is the value of dollar in terms of rupees. Then these should be equal to each other. 103.52 JPY equals 201.15 LKR. Then what is the value of 1 yen? Divide both sides by 103.52. You get 1 JPY equals 201.15 divided by 103.52.
Hello, sir.
Yes.
In the previous question, what is the mistake I had done is I had taken as 103.50. That is the mistake. Sorry.
No, it's okay. No problem. So that's the thing. So you have to be very careful. You make that's why I always ask, what's the method that you use? You may follow the same or the correct method or the correct procedure to solve the question, but you might have done some other mistakes. You may have taken the wrong numbers, or when you key in the calculator, you might have done mistakes. So therefore, the final answer may be incorrect. But as long as you know the method, 90% is okay. But remember, as I told you at the very first day, in a treasury, you can't do that mistake. What was the previous answer? 125.
99, sir.
99. How many cents? The difference? Just 2 cents. But if you do a euro 1 million transaction, what's the difference?
$2,000.
2000. 2000 what?
JPY.
2000
Yes. Sorry, JPY.
in terms of rupees. This answer is correct. 19431. When you divide 201.15 by 103.52, you get 1.9431. So this is correct. So 2000 JPY into 1.9, that means almost 2. It's almost a loss of for the difference of 4,000 rupees. You can see it's substantial amount. So you can't do this sort of mistakes when you are in the treasury. Is it clear?
Yes, sir.
Okay. Now, all these examples we did with single exchange rate. For each pair, only one rate. But in the market, you get how many quotes? When you ask for a price, you get 2 quotes, isn't it? You ask Euro USD, you might get something like this. 1.2173 and 1.2175. What are those? Why do you get 2 quotes, 2 exchange rates?
Bid and offer.
Bid and offer, or bid and ask. Bid and offer for the ask. So you get 2 quotes. So when you have 2 quotes, how do you calculate cross currency rates? That's the ultimate objective or ultimate thing that you should know how to do that. So in the handout there are three different examples. And the rule, there are 3 rules. You can remember that as a rule, or you can follow the intuition behind that and do the calculation. But either way you can do. But if you can remember the rule, it is easy. You can perform the calculation very quickly. But when you do practice it, it will come to you automatically. Whenever you see the currency pair, you know what to do that. So first one is when we have 2 indirect quotes. What does it mean by 2 indirect quotes?
They are the counter currency.
Yes.
Counter.
2 currency pairs.
Yes.
2 currency pairs in both. Dollar is in the
counter currency.
counter currency. So the example given here is Euro USD and GBP USD. Exchange rates given are 1.404547. Just check the correct. And 1.5995, 1.5995 and 98. Correct? What we have to do, find out the exchange rate between Euro and GBP. What is the exchange rate? Remember, whenever you perform a calculation or express an exchange rate of cross currencies, generally the strong currency would be considered as the base currency, except in the event where euro is involved. When the euro is involved, by definition or by the statute that they have established when they introduce euro, euro should be the base currency. Whatever the other currency, irrespective of that, euro should be base currency. So therefore, even though sterling is the strongest currency in between euro and sterling, in the currency pair, euro is considered as the base currency and the sterling pound is considered as the counter currency. Otherwise, according to the general rule, it should have been GBP against euro, because GBP is the strong currency. But it's not the way that we are doing, it's euro GBP. Now the problem is, how do we calculate the bid and the ask? The rule is, whenever there are two indirect codes, divide across. That means bid divide by the offer, offer divide by the bid. That is the meaning of divide across. But there are two bids and two offers. Bid divide by offer and offer divide by bid. That's the rule. But there are two currency pairs. Bid of which currency pair should appear at the numerator and what should appear in the denominator. In this case, numerator should be the base currency of the new currency pair. Exchange rate against dollar of the base currency of the new currency pair. So here Euro USD is one currency pair, GBP USD is the another currency pair. The cross trade pair is Euro GBP. Base currency of this is Euro. So therefore, when you divide bid by offer or offer by bid, these should be of the base currency rates against USD. That means 1.4045 and 1.4047. That's the rule. So that's why I have indicated like this, divide across. In this example, I have written that euro exchange rate top and the GBP or the sterling pound exchange rate at the bottom. But you may get it in a single line or in different places. However, you have to identify what is the base currency of the cross pair and use it accordingly. So when you divide bid by the offer, you get the bid side of the cross rate. When you divide offer by the bid, you get the offer side of the cross rate. Is it clear?
Yes, sir.
Okay. Then, if you know the rule, what you have to do, apply it. It's a cross division with the base currency at the numerator. So what is the bid of Euro US GBP. It is the bid of Euro USD divided by offer of GBP USD. So you get 1.4045 divided by 1.599. You get 0.877. Is it clear? Any question? Is it clear? Or you want me to explain
sir.
it? Anyone who wants me to explain it again?
Yeah, sir. Once again.
Sorry?
Please once again explain.
Do it once again, yes. What's the rule? Cross division. Rule is cross division or divide across. So numerator should be base currency. Base currency of the new pair. What is the cross pair here? Euro GBP. Whatever the base currency, euro, exchange rate of that against dollar, that should appear in the numerator. What does it mean by cross division? Bid divide by offer to get the bid. To get the offer, what you have to do? Offer divide by the bid. Then in both instances, the exchange rate appears on the numerator is the exchange rate against dollar of the currency in the of the base currency in the new pair. Remember, this rule is valid only when you have two indirect quotes. That means in both currency pairs, dollar would be as the counter currency. The price of the base currency is given in terms of dollars. So then only you can apply this cross division with the numerator or the base currency at the numerator. So in this example, euro is the base currency, GBP is the counter currency. in Euro GBP. Yeah. So then bid of Euro GBP, what you have to do, divide the bid of Euro against dollar, bid of Euro USD, divide by offer of GBP USD. That means 1.4045 divided by 1.599. Then you should get 0.8779. So then what is the offer of Euro GBP? What is the offer? Now you divide offer by the bid. Offer of Euro USD divided by the bid of GBP USD. What is offer of Euro USD? 1.4047. 1.4047 divided by 1.5995. You get 0.878. Clear? So let's do another example. AUD USD 0.726365. Euro USD, we use the same rate 404547. What is the cross currency pair? If we have these two currency pairs, what would be the cross currency pair?
Euro AUD.
Euro AU. Remember, euro should be in the at the base. Now, how do you calculate the bid and offer for Euro AUD? It's the cross division again, but in the numerator it should be the exchange rate of the base currency. In the denominator it should be the exchange rate of the counter currency. What is the base currency here? Euro. So therefore, exchange rate against dollar of euro should be at the numerator, and the exchange rate of Australian dollar against euro, sorry, Australian dollar against dollar should be at the denominator. So what's the bid figure? What's the bid? What is offer? To get the bid, you have to divide two numbers. To get the offer, you have to divide two numbers. What are the two numbers? To get the bid, it should be bid of the base currency. What is the base currency? Euro. What is the bid of that base currency? Base currency against dollar, that is 1.4045, and divide by the offer of the counter currency. Offer is counter currency is Australian dollar. Offer of the Australian dollar exchange rate is 0.7265. So this is the bid for euro USD. In the offer of euro 1.4047 divided by bid of Aussie 0.7260. Remember, both are indirect costs. Any question? The other combination is whenever you have two direct quotes. What does it mean, two direct quotes? What is a direct quote? What's a direct quote?
Dollar is a base currency.
In that currency pair, dollar is base currency. So even in this case, the rule is divide across. But the difference here is now counter currency at the numerator. In the event when we have two indirect quotes, we had the base currency at the numerator. But when you have two direct quotes, the counter currency is at the numerator. So bid equals bid of counter currency against US dollar divided by offer of base currency against US dollar. Bid of counter currency against US dollar divided by offer of base currency against. Then what is offer? Offer of counter currency against US dollar divided by bid of base currency you can get the offer of the cross currency pair by dividing offer of the counter currency against base against dollar divided by bid of base currency against US. So again a cross division, but which currencies appeared at the top, that means at the numerator of the division, is the only difference. So the exchange rates are given in that example. USD JPY, $80.2530. USD CAD, you can see dollar at the base in both pairs. So therefore, both are direct quotes. USD CAD 0.93, sorry, 9838 4 0.9838 and 4. What is the currency pair? What should be the cross currency pair?
CAD JPY.
JPY. Why?
CAD is stronger, sir.
That is stronger than what?
Yen.
JPY.
In this case, that's what we have to think. Our cross rate should include CAD and JPY. Between these two currencies, which one is stronger? CAD is stronger. So therefore, CAD JPY is the currency pair. Okay. If you consider dollar and CAD, which one is strong?
Dollar. US dollar.
US dollar. Dollar CAD. Which currency is stronger, dollar or the CAD?
It's dollar, sir.
Dollar.
Dollar.
Okay. Calculate. What does it mean? USD CAD equal 0.9. Forget about this part. US dollar CAD equal 0.9838. What does it mean? 1 USD equals 0.9838 CAD. Correct?
Yes.
So, and compare with this, your favorite. In dollar LKR, which one is stronger?
Yes.
Huh?
USD.
USD. Why?
To buy a $1 needs LKR 200.
200. Then in this case,
Is lesser than $1.
so then which currency is strong?
CAD is strong.
Can
That is strong because you pay less than one to buy a dollar. So if you calculate the reciprocal of this, 1 CAD equals 1 over 0.9838 USD. This should be greater than 1. You have to pay more than $1 to buy a 1 Canadian dollar. So the CAD is the stronger currency. But by convention, the currency pair is quoted as dollar CAD. But in our example, our concern is, or we focus on the cross rate between CAD and JPY. In that also, CAD is stronger than JPY. How do you get that one without, or before doing the calculation? Which one is strong? To get a $1, you have to pay 80 something yen. To get a for a dollar, it's only 0.9838 less than 1 CAD. So that means you pay more here, you pay less here. So this one is strong. CAD is stronger than JPY. Okay. When you calculate the CAD JPY exchange rate, what do you expect? Do you expect less than one figure or more than one?
More than one figure, sir.
More than one. It should be a large number. Since it's almost one here, very closer to the same dollar yen rate. Okay. We'll go back to the rule. What does it say when you calculate the cross currency rate? When you have two direct quotes, divide across with the counter currency at the numerator. Okay, what is the bid? Bid divided by offer. Bid of what? Bid of the counter currency. What is the counter currency here? Yen. What is the bid of the counter currency against dollar? It is 80.25. So 80.25 divided by offer of the base currency. Base currency is CAD. Offer is 40.984. What is the offer? It is the offer of the counter currency divided by the bid of the base currency. Offer of the counter currency is 80.30 divided by 988. So you divide almost by 1. So you should get something close to this. 81.53 and 81.62. The other thing is, you should receive a lower figure for the bid and you should receive a higher figure for the offer. In any cross rates. That should be the, even in the in our previous examples, when we have two indirect quotes, you should receive lower figure as the bid and a higher figure as the offer. Otherwise, something. Is it clear?
Yes, sir.
Okay. Now we'll do USD CAD. Dollar yen and dollar LKR. What's the currency pair? Cross currency pair?
JPY LKR.
JPY LKR, and again N is the currency. JPY LKR. What is the bid? What's the offer? Can you do it and tell me the answers?
So bid is 2.4900.
Sorry, bid is
2.4900.
0.4900.
Offer is 2.4934. 34.
34. What about other?
Hello, sir. Offer should be 2.4809.
2 point
Offer is 2.4809.
4809. Bid is correct.
Yeah.
Any comments?
The offer cannot be less than the bid.
Right. Don't need to do any calculation. Just by looking at this 2.49 and 2.4809, you should realize this is wrong. If this is correct. So you said this 2.49 is correct. If you get this one, you can't get this 2.480. So bid has to be lower than the offer. Okay, how do you do the calculation? JPY LKR. JPY is the base currency. LKR is the counter currency. Wait, to get the bid, what do you have to do?
bid of
Bid
counter
of
currency
counter currency divided by
by
the
bid of of
sorry of
base currency.
the base. So bid of counter currency
199.
the counter currency. So bid is 199.95 divided by
80.30.
of the base currency 80.30. You should get 2.49. I know what went wrong.
So it should be 200.10. That is a mistake I did.
Yes. So what is the? How do you get the offer of JPY LKR? How do you get it? Offer of the counter currency divided by the bid of the base currency. Now the question is, what is the offer of the counter currency?
200.10.
200.10. You can see 95.10. So 10 is less than 95. That cannot be. Then what has happened? In this case, the big figure has changed. Go 1 point up. So this 199 becomes 200 and 10 pips. That's what happens. Whenever you see something like that, you should realize the bid figure changed. So the offer is 210 divided by the bid of the base currency 80.25. 80.25. Then you may get 2.4934. Clear? Any question? So in this example, you learn two things: how to calculate the cross rate when you have two indirect codes. Not only that, the beta, how do you get it correctly when you have bid and ask or bid offer and with the lower figure at the offer. So when the figure at the offer is lower than the pips or the points in the bid, that says the big figure has changed. Go to the next level. So this is equivalent to writing 199.95 and 200.1. Okay, then the third combination. What is the third combination? When we have one direct quote and one indirect quote. This is the easiest one. Very straightforward. In this case, what we have to do, just multiply bit by the bit, offer by the offer. In this event, whenever you have one direct quote and one indirect quote, it's just the multiplication. You may say direct. That means bit multiplied by bit, offer multiplied by. The example given, USD JPY 80.2530, AUD USD 9952, what is the currency pair? AUD JPY. What's the bid? What's the offer? It is straightforward, just multiplication. 80.25 into 0.995. Offer 80.30 into 0.995. 798608 799386. So still you can see the bid is lower than the offer. Okay, any question? Any question? Is it clear?
Sir,
Yes.
in case of that indirect costs, there are 6 currencies, right? So other than that, all other currencies, the USD should be the base currency, right?
Yes.
That means they are the strong. That means USD is stronger than the currency.
No. In that that rule doesn't apply. When we talk about exchange rate against dollar, what is the strongest currency? That rule does not apply, because you can see dollar CAD, it is quoted as a indirect quote. Dollar is the base currency, but CAD is the stronger currency. So it doesn't apply there. Only in the cross rate, only in the cross rates that you have to apply that the stronger currency should be as in the base at the base, and the weaker currency as the counter currency. That's applied only to the cross rates. Others go by the convention, because as you mentioned, there are 6 currencies which are quoted in the as indirect quotes. Sorry, not direct, indirect quotes. Euro, Aussie, New Zealand dollar, sterling, Fiji, and Botswana. Only very limited currencies are quoted in the direct method, others are quoted as indirect. Dollar is at the base. But when you calculate the cross rate, stronger currency is at the base except for euro. Euro will be always at the base.
Fantastic. Thank you.
Any other? Is it clear?
Okay, sir.
Any other question?
Sir,
Yes.
sir, what is the calculation for this rule of calculation? One direct quote and one indirect quote.
What is the
Rule of calculation. One direct
For what?
quote, one direct indirect quote. This one.
This is just the multiplication. Direct
Straight up.
multiplication. Bid multiplied by the bid, offer multiplied by the offer. Any other question? Okay, now let me know. So whatever we discussed so far, are they very difficult for you? How do you gauge that?
If you can give us a sample questions, it's better.
I have already given. There are.
Right,
But
so
you have to do that.
it's okay.
Yes, I think you better to familiarize with the Google Classroom. All the materials are there. So please log into that and refer the materials. Even I saw in the WhatsApp group, people are asking for the handouts. If you have the access to the Google Classroom, no need to ask that. You can get into the Google Classroom and get it, because everything is there. Anything else? Any comment? Any other comment? So if you don't have any comments or any questions, few things. Now, by now, you should know the basics of foreign exchange, especially base currency, counter currency, direct quote and indirect quote. Then how to calculate the bid and offer. I'll discuss bid and offer little bit more on the bid and offer in the next handout, and how to calculate the cross rates. Now you should be familiar with those. Don't forget those. If you cannot understand the topics that we discussed so far, then you will be in trouble in the coming week. So in the remaining topics. So therefore, make sure that you revise what we have discussed so far. If you cannot remember those, in the future classes, you will be in difficulty, or you may not understand the concepts that we are discussing very well. So please do that. And I think, yes, this video is available. You can watch it anytime, but it would be better you attend the class and pay attention while you are in the class. Like if you are in a physical classroom, don't just switch on the or log into the session and walk away. You will miss a lot of things, and don't come back and ask questions. It's not fair with the people who has logged into the sessions. If you ask, if you are not there and come back and ask to repeat what we discussed earlier. So I think it's not fair with the others who have already in the class. So that's one thing that I would like to inform you. But apart from that, any time if you cannot understand while we are discussing the topic, that would be the best place you can ask that question. So then after that, if you try to do some calculations or solve some problem which may be the questions that I have given to you, or maybe something else that you found somewhere else, then you may raise those, then we can discuss. It will be beneficial for others as well. As I mentioned at the very beginning, don't be hesitated to ask questions. Don't worry, ask questions, then only you will know. And do the mistakes. You might realize you have done some mistakes when we did previous examples, but now you learn it. Now you will remember it. You did the mistake of taking the offer without changing the big figure. So you will remember that. So therefore, whenever given the opportunity, you do by yourself. Or even without the opportunity, try to do it by yourself. Then you will do a lot of mistakes. You will come up with questions that would be great or help you to understand the concept. So may I switch to the next topic or the next handout? Not the topic, it's still the foreign exchange. Do you have any questions?
Let's move.
Okay, let's move. So, and whenever I ask question or any comment, only few voices I can hear. So if they say yes, it's clear, we can go ahead. No option that I have to. If you don't want, if you want it other way around, please inform me. I cannot see you. I cannot read your minds from here without seeing your face. So I don't know whether you have understood or not. So if not, please let me. Otherwise, whatever the I will move with the response that I receive. So foreign exchange true. Here we are basically going to discuss about spot trading and forward exchange rates. So in the spot trading, what is a spot transaction? What is a spot transaction?
Settlement done on spot rate.
T plus 2.
Yes, settlement of the transaction will be taken place after 2 business days. So it is simple to remember it as T plus 2, but remember that 2 means plus 2 means after 2 business days. You have to remember that. So there should be 2 business days in between the trade date and the settlement date, including the settlement date. So the settlement will take place after 2 business days from the trade date. So that's a spot transaction. So in the market, all the quotes given in the market, again, I'm qualifying that statement in the wholesale market, not in the retail. Whenever you walk into the branch, the quotes given there, yes, you settle the transaction immediately. But in the wholesale market, all the quotes given are for spot value, unless specifically mentioned, otherwise it's for spot value. Clear? So then, as I mentioned, there are 2 parties, market maker and market taker. Market maker is the party who provide the quotes or quotes the exchange rate, not only exchange rate, any other price for any other financial instrument. It may be a stock, or it may be a bond, or it may be a interest rate. So whoever who provides or gives the prices or quotes, we call them market maker. The other party who acts on someone else's prices are called market takers. So I think the difference between market maker and market taker is clear. But sometimes market makers, same party, depending on the situation, the particular party, depending on the situation, may act as a market maker. In another instance, the same party may act as a market taker. That can happen. So this is the summary with the bid offer, 2-way quotes, and the market maker. So in foreign exchange, market maker, that is the quoting party who provides the prices to the market, always buys the base currency at the bid rate. Market maker buy the base currency at the bid rate. On the other hand, sells the counter currency. Here variables means counter currency. Is it clear? Market maker buys the base currency at the bid rate. Then at the offer rate, market maker sells the base currency. Market maker sells the base currency at the offer rate. Then the opposite is applicable for the market taker. Market taker will sell the base currency at the bid, and market taker will buy the base currency at the offer. Clear? Is it clear?
Sir, can you repeat it again?
Yes. Market maker, that means the party who provides quote, buy the base currency at his bid rate. Whatever the bid price he quotes, at that price, market maker is willing to buy the base currency. And the offer price, market maker is willing to sell the base currency. The opposite is applicable for the market taker. At the bid of the market taker will sell the base currency, and at the offer, market taker will buy the base currency.
So market taker and market maker, are they two parties in the same transaction or different transaction?
Two parties in the same transaction.
Two parties same transaction. Okay.
That's why I told you in two different transactions, the same party may act. In a one transaction, one party may act as a market maker. On another transaction, that same party may act as a market taker. That can happen. Dollar yen 80.2530. Market maker. That means the quoting party. The party who makes this quote. What he will do at 80.25. Market maker buys base currency. What is the base here?
USD.
USD at
80.25.
what is the price that he is going to pay in yen to buy a $1. So he buys yen, sorry, dollars. Dollar is the base currency. So he buys dollars at 80 point and he sells base currency again, that is USD at 80.3. Buy low, sell high. That is the rule for the market maker. Market maker will buy at a lower rate and sell it at a higher rate. So that's why bid is lower than the offer. So he buys dollar base currency at the lower rate and sells it at the higher rate. Whenever he quotes these two rates, if there are two parties, one is want to buy and one is want to sell, the market maker would be happy. He immediately make a profit of 0.05 per $1. So then what does market take he buys still the base currency USD at what rate? If the market taker wants to buy dollar against yen, he has to pay
80.3.
0.30 if that party wants to sell the base currency would be at 80.25. Clear? Is it clear?
Yes, sir.
Okay. Let's see.
Excuse me, sir, that market taker buys the USD at 80.30 and sells at 80.25, which means there's a 0.05. Is he making a loss on that in that case?
If you do the same with the same party at this cost, buy and sell, yes.
Okay.
So that's the you are paying the spread. As a market taker, you always pay the spread. Market maker earn the spread. Market taker pay the spread.
Thank you. Thank you.
In all the instances, same, no? In market taker,
In all the instances mean, what do you mean by all the instances?
that's mean this market taker always see the loss, or in some instances only he will.
For the time being, I would like to say yes. In this most of the cases, this is true. But there are instances whether you pay or receive depend on some other factors.
Okay.
We may be able to discuss it today or next week. But generally, for most of the products, this is the truth. Market payer pays the spread. Now, in general, yes, in all the cases, the spread is paid by the market taker. Spread.
Okay.
So that's why I just wanted to know what do you mean by all the cases. Spread is paid by the market taker. For the spread, this is true. In any instrument, any market, the spread is paid by the market taker. Okay. Any other question?
Sir, excuse me. In this case, market taker loses, right?
No, yes. If you buy at 30 and sell it at 25, you lose. But you don't do that simultaneously. At the same time, you don't ask a price from a party and you do buy and sell with the same party at the same time. Practically, it won't happen. Is it clear?
So that can work as a switch, sir.
Sorry?
That can work as a switch.
What does it mean?
If the base currency is higher than the counter currency?
Base currency is higher than the counter currency. What do you mean by base currency is higher than the counter currency? what do you mean by the base currency is higher than the count currency? So in this one, which currency is strong, higher? Dollar, yen?
Dollar.
Dollar. In this, which is the strongest currency?
USD.
Hmm?
USD.
Still USD. This one,
It's euro.
it's euro. So what do you mean by the previous question you asked? So higher switching higher currency or something like that. What does it mean? So what do you mean by switching? So whenever, say in this example, you buy euro, what does it mean? You buy euro and meantime you sell USD, isn't it? You buy euro while giving USD. So it's a switch, sort of. You change your currency. You give dollars, get euros. So if you sell euro, which is equivalent to buy USD, you do a switch. You change your currency. So if you can clarify that, I can answer that question. I'm not sure. What do you mean by switch and what you said, higher currency? So may I move forward or you have?
Just one thing to clarify. In the real-time examples, can the market maker and market taker can be the bank and the money brokers?
No, brokers they are not a part of the transaction. Whatever the code provides by a bank, the broker will show it to another party. So the bank who quotes the price would become the market maker, and the other bank which agrees on the transaction based on that code would be the market taker for a few minutes, like for a few seconds, while he agrees on the transaction. Market the money broker you can consider as a market taker, but meantime he becomes the market maker as well. So if bank A provides this code, say 80, 25, 30 to the broker, broker will show that same thing to bank B. So in this, broker is like acting like market taker, but in this, broker is acting like a market maker because the broker is showing that same code to the bank B. Whenever bank B acts or say sell, he will repeat So bank
broker is and working as an intermediary, sir.
yes,
Is it right?
so broker is act as an intermediary just to bring the buyer and the seller for the market maker and the market taker together. So therefore, in that case, he is not a market taker or a market maker. Bank A becomes market maker, bank B becomes market taker. He just pass the information. The broker just pass the information to the other party. Is it
Thank
clear?
you. Yes,
Do
thank you.
that intermediary or broker charges for his service?
It's based on the notional amount per commission. He doesn't add any margin to these costs.
Sir, I have a question with regard to that. In the market maker and market taker, it's based on only on the base currency, right? But in the if he wants to buy the or sell that counter currency,
Okay.
how that happens?
So basically, you have not understood the concept. What I just told you, when you buy euro, what do you do against dollar? You sell USD. So both are involved, not only one currency, not only base currency. Even though I say you are buying base currency, what does it mean? Whenever I say buy base currency, which is equivalent to selling counter currency. Clear?
Okay, sir.
So that's the concept. So that's good. That's the thing that I wanted to do here with these trades. Okay, assume I am the market maker. I have given, so I have quoted these. I'm the market maker. So these are my quotes. You are market takers. You are market takers. Tell me at what rate you buy euro, everything, okay, euro against dollar. You buy AUD against dollar. You buy JPY against at what rate you buy euro against dollar. You are market taker. These are the quotes given to you.
It's a market taker has to buy it at the offer.
Yes, market taker has to buy base currency at the offer. So in the euro dollar pair, euro is the base. So you want to buy base currency against dollar. You want to buy base currency. So what's the price that you have to pay?
1.2119.
1.2.
1.211. You want to buy OC against dollar. At what rate you buy?
0.9898.
9898.
9898 at the offer. You want to buy yen against dollar.
It's 80.25.
80.25.
25.
Why is that?
Because it's the counter currency.
This is the counter currency. You buy counter currency means you sell the base currency. So you sell the base currency at the bid as the market take. Clear? If I add another row here, you buy USD against, what's the rate? You buy dollar against euro.
One 1.2117.
You buy dollar against euro means you sell euro. You sell euro at 1.2117 at the offer rate. Sorry, at the bid. You sell AUD against dollar.
$9893.
You sell AUD against dollar. As a market maker, you have to take the bid. 0.9893. You sell dollar against JPY.
$80.25.
80.25. Both are identical answer. Whether you buy yen against dollar or whether you sell dollar against yen, same. Is it clear now? Based on the currency that you want to buy or sell, whether it's a base or the counter, and whether you are a market maker or a market taker, you have to select the correct port. Any question? Is it clear? Any question? If you don't have any questions, answer. Assuming you are the market, assume you are the market maker. Now answer the same question. At what price, at what rate you buy euro against dollar? You are the market maker.
Market maker buys euro at 1.2117.
Market maker buy euro at the bid. So simply at the bid. So 2117. Because euro is the base currency.
Yes, yes.
So you buy as a market maker, you buy it at the bid. You buy dollar against euro.
It's at offer 1.2119.
Yes. You buy dollar against euro means you are
Selling
selling.
euro.
You sell euro base currency at the highest rate. That means the offer. That should be 1.2119. Then you buy Aussie against dollar. Again, Aussie is the base currency.
Yes, yes.
So you buy, as a market maker, you buy it at the bid. 0.98. You sell Aussie at against dollar.
Offer.
It's at the offer. You buy yen against dollar. You buy yen against dollar. What does it mean? You sell dollars.
Dollar.
Sell dollars
82.
at the offer.
80 point.
So 80, 30. The second one is same as 80. So depending on whether you are a market maker or a market taker, whether you buy the counter currency or the base currency, you should be able to identify the applicable rate. Any question?
No, sir.
Okay. If you don't have any questions, we'll take a break. After that, about 15 minutes. After that, we'll continue. Is it okay?
Yes, sir.
Okay. Okay. Thanks.
Yes, sir.
We'll take a break of 15 minutes. Any questions? Okay. So few transactions which were there earlier. You buy euro against dollar at 1.2117. The second one, you buy dollar against euro at 1.2119. Likewise. So if I fix, you buy euro 1 million. If you want to buy euro 1 million, what's the amount of dollars that you need? You say you want to buy euro 1 million. This transaction, you buy at 1.2117. What is the amount of dollars that you sell?
Uh, 1,211,700.
Yes. How do you get that? 1 million into the rate 1.2117. You get 1,211,700. The second one, you want to buy dollar against euro. So generally, you do this type of transaction when you need some dollar amount fixed. So in this case, if I say it's USD 1 million, if it is dollar 1 million, you buy dollar 1 million, then what's the amount of euro that you sell? You buy dollar, that means you sell euro. What is the amount?
$825,150. 825,150.
How do you get that?
1 million divided by the cross rate.
It is 1 million divided by the exchange rate. What is 1.2119? Because per euro, you have per euro 1.2119 dollars. So therefore, to convert the dollar amount into euro, you have to divide. What about this one? If it is AUD 1 million, you want to buy Australian dollar 1 million against dollar. What is the amount of dollars that you need? It is again the 1 million multiplication, 1 million into 9893. So you need dollars 989,300. What about this? You want to buy JPY. Assume it's JPY 1 million. What's the amount of dollars that you need? That's again dollar 1 million divided by the 1 million divided by the rate 18. So amount of dollars you need is 1 million divided by the exchange. Is
The
it?
JVY rate is 80.30, right?
Sorry, 80.8.
0.8.
Not 98.30. It's 80.30.
Is this applicable to market maker situation only or the general situation?
No, is there anything? Once you decide the rate is applicable. Why do you think like that? When the rate is decided, there can't be two different ways of calculating the equivalent amount for the market maker and the market taker. The rate is decided. The rate is decided based on whether you are a market taker or a market maker. Once the rate is decided, for both parties, it has to be the same. Otherwise, if you are a market taker, you see one amount, and if you are a market taker for the same rate, can it happen? You pay a different amount. No. Any other questions? So if you don't have any questions, move forward. I'll share the presentation again.
Sir, will you mind just turn a little because the board is
You-
able to see the board.
You want to see?
Yes, sorry about.
No, it's okay.
Thank you, sir. Thank you.
Okay, fine. So we'll move into the presentation.
Sir. Sir, in the second one, sir.
Yes.
Sir.
Yes.
In the second one, that currency picking base currency should be euro, right? That.
Yes, base currency is euro. Still, the base currency and counter currency, there's no change. Base currency is euro, but
That's right.
you buy dollars against euro, and the rate is decided now.
Okay, sir. Okay, sir.
Okay.
So, sir, that means that it doesn't say that you need euro this much amount.
No, so generally in the
To buy
market,
a USD, no? That's
yes. In the second example, what does it say? To buy $1 million, you need this much of euros, or you sell this much of euros to buy $1 million. Is it clear?
Okay, sir, but it doesn't say that according to that code, when you quote the rates, should be the to buy a USD $1.
Sorry?
Means euro as it shows, but it is not.
No, I didn't get that.
Here, no?
I didn't get your question.
When we write when we write that rates, when we write rates, we usually mention the one currency first. This case is not the case.
One currency?
When we write rates, exchange rates, we write the base currency against the counter currency, no?
Yes.
That gives the signal that one to buy a one base currency, how much other should be spent. This
Yes.
in this case, it is not the case, right?
No, it's still the same rate.
Okay.
You buy or sell, €1 equals in this instance. What's the board? Now, can you see the board?
Yes, sir.
Yeah. Okay. What does it mean?
Can see.
€1 equals $1.2119. So if it is the case, to get $1 million, how much of euro that you need?
But it has written in the second place, no, that's why I told that.
Sorry,
here it has written first USD, no?
No. Here what I mentioned, what you want to buy. You want to buy dollar against euro at this rate. I haven't.
Okay, sir.
In this, I have written this is USD euro rate. No, it's not like that. Still, the rate is same.
Okay, sir.
The same interpretation. So don't.
Okay, sir.
Don't get confused in those. All the rates will be quoted in the standard manner. So we were here, we were discussing this. So now you are clear what market maker does at bid and what market taker does at the bid price, also at the offer price. Okay, now in the market nowadays, the electronic trading platforms are getting familiar and mostly now use electronic trading platforms. So this is an example screenshot from the Bloomberg trading platform for FX. So you can see that this can be customized according to the user. So you can add whatever the currency pairs you want. There may be a limit, maybe some figure, maybe 10 currency pairs or something like that. But you can select Euro USD, GBP USD, dollar yen, Aussie dollar, sterling Aussie, dollar CAD. Likewise, if you want, you can add. Then who are the parties that you want to or you are allowed to trade with? Based on that, you can select the parties. Then you can see the codes provided by this each bank. So for euro dollar, HSBC code has 1.36105. So now the markets are very competitive. They are quoting even for the fifth decimal place. Sometimes for the yes, mostly now fifth decimal place. Earlier it was only up to 4th decimal place. Now it's very competitive. They quote up to the 5th decimal place as well. So you can see different quotes from different banks for euro dollar. This side is the bid, this side is the offer. What does it mean? HSBC is willing to buy euro against dollar at 1.36105, and they are willing to sell at 1.36111. Likewise, these are the quotes of different parties. So if you are the market taker, all these parties are market makers. They are streaming their prices. These prices will change very frequently, even within milliseconds. You can see it like changing it very. You can see this blinking and changing the figures very quickly. Now, this is a snapshot, so therefore you can't see it the changing, but figures will change very quickly. Even within a few milliseconds, prices are changing. However, if these are the codes, not this row, other rows are codes provided by these banks. So all these banks are market makers. So as a market taker, what is the best rate for you to buy euro? You are given codes of all these banks. There are 9 banks. What is the best price for you to buy euro?
The TD securities price.
1.36109.
1.36109. Why?
Because the lowest rate.
Yes.
Lowest offer.
Yes. Lowest offer. You should buy at the lowest offer as a market taker. You pay less, so you should go for the lowest offer. So you can see here this 1.36109 is quoted by 2 different parties, Standard Chartered and Bank of America Merrill Lynch. And at the top you can see the same figure. So this provides you the best offer. And similarly, on the bid side, what is the best bid for you to sell euro? It should be the highest bid. So 1.36106. That's the best bid quoted by 3 banks. You can see it at the top. So this top row shows you the market best prices. We call it market because this is for you. These are the old market makers. So this is market. Where is the market? 36.10.6 and 36.10.9. This gives you the lowest spread. When you take the highest bid and the lowest offer, that will give you the lowest spread. In any other combination, spread would be much higher than this. So depending on your requirement, either you can sell euro or you can buy euro. In this, it is easy. You can see it. What is your action? Whether you sell or whether you buy. And the amount is given here. That you can key it. When you set it up, you can put the amount. But remember, that is 1 million euro. If you want to change it, $1 million, then you have to put $1 million.
So this quote is given for this amount.
Yes.
is the generic?
No, the quote is given for this amount. It is valid for this amount.
If the
So
amount changes, the quote changes.
yes, then you have to put the amount here. The other thing here is, if you want to do the trade, what do you have to do? Click on the trade. Just say if you want to sell euro, either you click here, sorry, or click, if you click here, it will be executed through one of these parties. If you want to click on a specific party, you have to click on that. Say if you want to, you prefer to do the transaction with BNP Paribas, you can click on this. Or otherwise, you are indifferent, whichever the party, no problem. So you can click on this figure. Then the trade will be done. You can set it up as whether you need 1 click or 2 click. If you set it as on 1 click, the moment you click, the trade is done. You will get a message saying that you have done this transaction. If it is 2 click, once you click it, it will give up a pop-up asking you to confirm. You have to confirm it very quickly, otherwise it will change or reject. Once you click on the confirm button, the transaction is done. So this is an example of electronic trading platform. Yes, there was a question.
So
excuse me. So excuse me. Only banks are participating for this, or any securities? There is one you have mentioned there, TD Securities. What is that, sir?
TD Securities, it's a bank, Toronto Dominion Bank, Canadian bank. They goes as TD Securities. They do trade. All these parties do trade in securities, and that means government bonds, not in Sri Lanka, international market, or US government bonds, and Europe and major countries, government bonds as well as currency. But they may have different arms. The TD Securities is the Toronto Dominion Bank.
So only the banks are participating for currency.
Yes, major banks.
Oh, okay. Thank
so
you.
with this, the broker is no longer required, because the banks are directly caught. Banks are directly caught into the other party. No need any broker. Now the brokerage role is brokering role is played by this platform provider, Bloomberg. And if you take some banks, like some of these banks, they do have their own trading platforms as well. Once you logged into that platform, you can see the codes provided by that particular bank only. Still, you can click and do the trade, but you can't see the codes of others. But the trading platforms like Bloomberg or Reuters, you can see the codes of different banks. Then you can select the best price. That's the advantage of having, we call this multi-party or multi-bank platform. In others, individual banks platforms, you can see only the codes of the particular bank. There's another question.
So when you came into the screen, you qualified saying that these are the banks that are allowed to trade. Like,
yes.
Is it like?
Yes. So basically, for a treasury, you can't trade with any party. You should establish a relationship with a party. You do an assessment about your counterparties, and there's an eligible list of counterparties, and with different parties, your exposure limits are different. There's a limit structure like that. You will discuss those structure in future. So based on that, you are allowed to do foreign exchange transactions with these parties. So these parties may change from one bank to another bank.
Okay, thanks.
So this is one way of doing that, and this one is a now this is also bit old method, and now we are getting out from the picture like brokers, but still there are transactions. Still there are users still, or the countries still use this method. Especially even in Sri Lanka, still we use this in the interbank market, I guess. So this is Reuters platform. This is not the electronic. Now Reuters, they have another electronic platform. Like in the previous one, you can see the codes of all parties, and you can click. But this is the bit older version. You can have a chat with the other party. That's how. So if I explain this screen, this is the text that what is the chat. So this is the conversation here. So you can see straight away AUD 5 million. So whoever who asked in this example, Central Bank Sri Lanka, asking a quote for Australian dollar 5 million. This is the general practice. You don't, if it is against dollar, you don't mention that dollar, just the other currency, AUD, or if it is euro, and the amount. You have to mention the amount, because depending on the amount, the price may vary. So once you type it and press the enter button, immediately this text will appear on the other side. Within seconds, that party will quote you the price. So you can see the quote is 1570. Only the last two digits of a bid and offer. You can see bid is lower than the offer, 1517. Only last two digits. Then from our side, we have said I buy. Nothing else. Within few seconds, probably less than a minute, you conclude this part. If you want to buy, you say buy, or you want to say sell, you say sell, something like that. Then what is below that, that party is giving the instructions. So since we are buying Australian dollars, we have to pay US dollars. To where that we should pay Australian dollar, it's sorry, US dollars. It's with the JP Morgan Chase New York Bank. This is the account number. I deleted it, and the value date 31st January 2011. Thanks. That's it. Then from our side also, it confirms to make sure that everything is correct with the big figure 0.9917. I buy 5 million, value date, and where should we receive our dollars. So after that, if you want, you can have another chat, discuss about markets and things like that. But these are the minimum. This is the minimum that you require to do a trade on this type of a chat, or even a voice. That means over the phone, you may have to exchange this information. That's the market practice.
So when you quote this 1517, so these big figures, like, it doesn't change, right? So
no,
within few hours, it will like always the spread is the difference, right? Like how would you...
not only the spread. It may be 1517 within few minutes. It may be 3032 or something like that, or it might come down to 05 07, something like that. That
But
depends whether the market is how much volatile. It may be in a second, this may go down to 98.99, something like that. That can happen.
okay.
But at the time of the quote, you know what is the big rate, big figure.
So
Any
if you
other
can
question?
if you can
Yes.
go for the previous screen where online trading is happening, of course here the ticket size is 1 million and they are not quoting whether they are in the selling side or buying side.
No.
And
No, you whenever see, even here, we are not revealing whether I want to buy or sell. That's why you get two-way quotes. 15, 17. I can trade either the bid or the offer. Even here, the same thing. The market makers always provide both sides, bid and the offer. It's up to the market taker to trade on the side that the market taker wants. Is it clear?
yes, is that always like is it a must to all the participant has to give the bid and offer for a quote, or
Yes.
they really don't want it to?
Yes, generally market taker won't reveal the side that you want to trade. If you do reveal it, they will take the advantage.
Yeah, my question is, like the market participants who are here, if there's a quote like 1 million euros, is there's a must for them to quote it, like
Yes.
bid and offer?
Yes, if you ask, if one bank call and ask from another party, it's a must to quote. You can't say I cannot quote. Then you are not a market maker, and whenever you want, they won't quote you. Whenever you want a quote, other parties won't quote you. Yeah, in the business you have to do that.
All right, thank you.
But the thing is, in the local market, you quote only against rupees, say dollar rupee. Basically, even in the domestic market, you don't quote to another, or you may not ask euro rupee from a local bank. Instead, what do? You do a dollar rupee trade in the domestic market, and the euro dollar trade in the international market. That's the general practice.
Thank you, sir.
Anything else? So, okay, same thing like what I explained here. Identifying the good price. That means what is the price that you want to trade? Euro USD. 5 banks has given these quotes. What is the best bid and what is the best price offer in this example?
Bid is 1.3609. Offer is 1.3612.
Offer is 1.36
12.
1
2.
2. So you are a market taker. The best bid is 1.3609 and 12 is the best offer. Yes,
offer.
912 is the market in this case. You can you are a market taker. So again, go back and think. You are a market taker. What is the best bid for you, and what is the best offer for you? Any other answers?
The bid is 1.3612. And
There's no bids like that.
sorry, buy dollar euro at 1.3612. Sell
You buy
at
dollar, you buy dollar or euro.
Euro. Buy euro at 1.3612, sell at 1.3611.
Yes. The best bid is the highest bid. 1.3611. Best offer is the lowest offer. So 1.3612. You can sell euro at the highest rate. That means 1.3611. If you want to sell, you sell to JP Morgan. If you want to buy, you buy from Barclays. Clear? Is it clear? So that's the market. 11, 12. Then the spread is only 1 pip. As a market taker, you can buy at 12 and sell at 11. Okay. Then in the voice trading, this is a small example. In a voice trading, when you call them, you just introduce yourself. For the party who picks up the phone, first tell, so this I am so and so, and the party who calls or the take the call also introduce, then straight away ask the price. No need to say that USD, but if you want, you can do that. AUD for 10 million, please. So remember, whenever you say something like that, 10 million of what? Which currency? This is base currency. AUD USD for 10 million, please, means you need a price for Australian dollar 10 million. But if you need for dollar 10 million, you have to say Aussie dollar for dollar 10 million. You have to be specifically mentioned for dollar 10. Otherwise, the party will quote you on the base currency. Or if you don't mention it, the quote is given for the base currency amount.
So you can request for USD AUD then.
Sorry?
Then you can request for USD AUD at 10
No,
million.
no. Don't do that. Then the rate would be reciprocal. You don't do that.
Okay.
You ask for Aussie dollar, but for dollar 10 million.
Okay. So
The rate still would be the same way. Otherwise, then you have to calculate the reciprocal and things, because the market convention is to quote on this way. Base currency, counter currency. The convention, base currency, you don't change. So the quotes 5661. Then the market, means market maker, MT means market taker. Market taker just say 61. What does it mean? Market taker, what is his action here? Buy AUD 10 million at 61. So then once this is heard by the market maker, he will confirm the trade. So to confirm, you buy Aussie 10 million against US. So this should be USD at 0.6761 for value spot. That's it. So this is the basic. Then even the money market taker can confirm it. and exchange the settlement instruction if necessary. So this is on only one way. The coming this slide you can see different ways. If you want to buy, either you can say I buy, or mine, or without I you can say buy, mine, 61, whatever the offer rate you can type here. If you type the offer rate, that means you agree to buy. If you type the bid rate, that means you agree to sell. Or you can say 61 done, or I take, if you want to buy. If you want to sell, you can say sell, or yours, or this is the bid price, or bid and say done, or I keep. So these are the some of the ways that the most common ways that you do on a voice. Or if you don't want to do any trade on the quotes given, you can say nothing done. You can say politely nothing done, thanks. Then no trade is done. That can be done. Or you can ask to improve. So, but what does it mean? Say 5661 is quoted. When you ask to improve, that party doesn't know whether you want to buy or sell. What they can do?
Spread.
They can narrow the spread. That can be done in different ways. They can keep 56 fixed, but bring it 61 to 60. Bring the offer down. Or they can keep the offer fixed, bring up the bid instead of 56, 57, 57, 61, or 57, 60. Change both. That can happen. So it may work your favor, or it may not work in your favor, but still the spread gets narrower. Or there may be some instances the party may quote you choice price. Whenever you ask a two-way quote, they may not quote two prices, just one price, say 61, or 61 choice. What does it mean? You can either buy or sell at that price. They don't worry about it. No spread, zero spread. They will give you, the party, market taker will give you a choice price. When you maintain a very good relationship with parties, sometimes that can happen. They don't bother about selling or buying at that rate. But the thing is, whenever you are given a choice price, it's not nice to say nothing done. There's no spread, so only one quote is given. Either you can buy or sell. So it's not nice to say nothing done. You should either buy or sell. So that's how you trade in the market, the basics. Any question? If not, I'll move into the next one, trend in market. That means market is going up or going down. How do you quote? If you are a market maker, in a trend in market, how do you quote? So for this example, assume you are a trader, you believe that euro will strengthen against dollar. Then what do you expect to happen for the exchange rate, euro dollar exchange rate? Euro strengthening, what does it mean?
It will go up.
Exchange rate will go up in the future. That is your expectation. And the current market is 1.3611 and 12. Yes. Yes. So 1.361112. This is the market. If you think euro will go up, euro will strengthen. then what is your preferred trade? You want to buy euro or sell euro? Now, you want to buy euro because whenever the rate goes up, you can sell it at a higher rate.
Why?
So you want to buy euro.
Why?
So you are a market maker. How do you influence market takers to sell euros to you? 1.361112 is the best bid and offer in the market now.
So you can give a better offer.
You want to buy. You are the market maker. What do you have to give? Better bid or the better offer?
Better bid, right? So I can increase the.
You have to give a much better bid for them to sell. When the market is 11, 12, if you quote 12, 13, what would happen? They won't buy at 13 from you because they can buy at 12. But they will sell to you at 12 because all other parties are quoting 11 or below that. So you slightly increase the bid up. So if everybody is going to do that, that's how exchange rate goes up. That is we call shading the bid. You increase the bid up while increasing the offer as well, because you don't want to quote lower than this on the offer side in this scenario. Why? If you quote, say, you can't do that in this instance because the spread is 1. You can't quote 12, 11 or something like that. Even you don't quote 12 choice because they can buy. If they buy, you go short or you are selling. Then when the exchange rate appreciate or euro strengthen, you have to buy it at a higher rate. So you don't want to do that. You want to buy euros. So then you bid up the exchange rate price. So that is called shading the bid. Then shading the offer, it's the other way around. If you think euro will weaken in the future, then the exchange rate will go down. What do? You lower the bid and the offer as well. Then they can, or the market participant, market takers may willing to buy from you. That means you are selling euros. When the exchange rate goes down, you can buy them at a lower rate and make a profit. Is it clear? How to quote in a trending market. If you think exchange rate to go up, you bid up your quotes. Or if you think exchange rate to go down, you lower your offer, asking others to buy from you. Any questions?
Can you please explain what is meant by shading the offer?
Shading the offer means when you think the exchange rate is to go down, you lower the offer. Now the rate is 11, 12. You think exchange rate will go down. You want to encourage market takers to buy from you. So you will quote 10, 11 or something like that. Then from 12, the offer rate goes to 11. Then the market participant won't buy from any other party because they are quoting 12 while you are quoting 11. Then the market participants will buy at 11 from you. Then you are selling euros. You do that with the expectation that euro will weaken.
Okay, sir. Thank you.
Any other question? Then the FX position. That means what is your position? If I ask you, do you have any FX position now as an individual? That depends whether you have any foreign currency in your position. That means whether you have any assets in foreign currency or any liabilities in foreign currency. Even if you have any liabilities in foreign currency, then you exposed to the exchange rate. So sometimes you might have assets in foreign currency as well as liabilities in foreign currencies. Then the position is the net amount of that. But when it comes to foreign exchange trading, you have to assess your position based on the currency pair, because whenever you have euro dollar position and sterling dollar position, you cannot combine them together. So you maintain your position by currency. Your euro position is different from your yen position, and it's different from your sterling position and Aussie position. Based on the currency pair, you maintain your position, FX position, as a trade. And basically we maintain it based on the base currency, and see whether you are a net buyer or a seller. Within a given time frame, you can do many buy transactions and many net sell transactions. Then what is the net amount, whether you are a net seller or whether you are a net buyer? Depending on that, we say whether you have a long position or a short position. When you are a net buyer of the base currency, then we say you have a long position. When you are a net seller, then we say you have a short position. So when you have a long position or when you are a net buyer, you have an asset in that currency. When you have a short position in a particular currency, that means you have a liability in that currency. Is it clear? Long position and a short position. And to trade in foreign currencies, you don't want to have anything in your position. Without having anything, you can start doing trading. You don't have any euros, but you can sell euro initially. You don't have any Aussie, you can sell Aussie. That can be done. Without having it, you do that. Yes. Any question?
But you said that short selling is not allowed in Sri Lanka?
Short selling not allowed in Sri Lanka, only in the government securities.
Okay, so the FX is okay.
FX, it's okay, yes.
Okay, thanks.
Any other question?
Can you give us example on long position, please?
This one. So as a trader, you have to record all the transactions that you do, which is called the trader's blotter. So this is an example of a blotter. So you can see base currency is euro. What is the amount? Plus amount means you have bought. Negative amount means you have sold. So what is the rate and what's the counter currency? So as I mentioned, basically you maintain the blotter for different currency pairs, different blotters. So this is the euro dollar blotter. So you trade euro against dollar. So there are 1, 2, 3, 4, 5 transactions, and you can see at the end what is the net position. Buy 1 million, buy 3 million. So once you buy this 1 million, you have a long position of 1 million because you have bought euro against dollar. So you have a long position in euro, or you can say you have a short position in dollars. But generally what we do, we refer it in terms of the base currency. So you are long in euro. That's how we refer it. So once you enter into this first transaction, you are long euro 1 million. So in the second transaction, you buy another 3 million. Then what is your position? Once you enter into the first 2 transactions, what is your position?
Long 4 million.
Long 4 million because you have bought 4 million. So then in the third transaction, you have sold 2 million. You have sold 2 million. What is your position after the third transaction? What is the net amount?
Long 2 million.
1 plus 3, 4 minus 2 plus 2. Still you have a 2 million long position. So in the fourth transaction, you buy another 500,000. At the end of fourth transaction, you are long 2.5 million. At the end of the fifth transaction, you can see here the net position is you are long 1.5 million. Is it correct, that part? How do you calculate your position on the base currency? Is it clear? You put plus figures for the amounts that you bought. You put negative figures for the amount that you sold. Then add them together. Whatever the figure that will, whatever the answer that will give you your position. If it is a plus figure, you have a long position. If it is a negative figure, you have a short position. Then the other thing, you do different trades at different trades. You can calculate the corresponding amounts in the counter currency. In this example, counter currency is dollars. So when you buy $1 million at 1.3995, you have to pay, or you go short in dollars, $1,399,500. So to buy 3 million euros at 3998, you pay this much. So these are the amounts in equivalent dollars. When you add them together, you get your dollar position here. So when you go long in euro, definitely you should go short in dollars. You can't go long in euros while you are going long in dollars as well. Because when you buy one currency, you sell the other currency. In a single currency pair, whenever you go long in one currency, you go short in other currency. So in this example, you go long in euro, so therefore you should definitely be short in dollars. So you have $1.5 million at a cost of this much of dollars. Once you net this, you get the total cost of your holdings of euro. So this is the cost. To buy 1.5 million euros, you have paid $2,099,650. So what is the applicable rate. How do you get this on average rate? You divide this 2099650 by 1.5. Then you get this rate. This is your cost, your average rate. Once you do all these transactions at these rates, and the current position is you are long 1.5 million at a rate of 1.3998. Is it clear? You divide this dollar amount by this euro amount, then you should get this figure. These are the rates that you agreed with your counterparty and you trade it at this rates. But this is the net position in euro terms, in dollar terms, and as an rate. Is it clear? Any question? So now then assume you have $1.5 million purchased by paying $2,099,650. That means at a rate of 1.3998. What is the market rate? Now the market rate is 1.4002. Are you making a profit or a loss? This is your cost. This is market. You are long.
So it's a profit because you bought.
It's a profit, sir.
Yes, it's a profit because your cost rate is lower than the market rate and you are long. That's important because you are long. Your cost rate is less than the market rate. So you earn a profit. If you want to calculate the profit, what you have to do, take the difference between your cost and the market rate and multiply it by 1.5. So that would be profit. Unless you sell the last position 1.5 million in the market, this profit would be a unrealized profit. You have not yet realized, because by the time that you are trying to sell, market rate may be at a different rate. That's the amount you realize. It may be more than 650 or less than 650, depending on at what rate you execute the transaction. But based on the market rate prevailing now, this is your unrealized profit. You can see after doing all these 5 trades, your profit is only $650. Remember, this is in dollars. Profit comes in dollars.
So excuse me, why you have shown this 1.5 million here as a in brackets as a like
negative?
Yeah.
So you consider that you are selling at this price, then only you come to zero. If you sell it at that price at this rate, this is the dollar amount that you receive. The difference between these two rates is the 650. No need to do that. You can just take the difference and multiply by this. You get this 600.
Thank you.
Anything?
I think the calculation is wrong in multiplying 1.5 into 1.39998. This should be 2099,700.
2099,650 divided by 1.5. Yeah, the thing is it's 1.39976666. So I rounded off to 3.9998. That's what happened.
Yeah,
so you divide. How you should get this is you should divide this. This is your real cost in dollars. This is the amount that you have in your hand in euros. So the cost is, you divide this figure by this. So then you get 1.39976666. So whenever you round it off, it becomes 3.9998. That's how it happened.
So is it okay? This amount
The,
20990.
yes, better to round it.
Because if we get the difference between 1.399 and
Yes, you don't now you don't get this figure as it is if you put 9998, but I did it in Excel for the spreadsheet, so that then it will consider that and you will get this 650 exactly.
Okay.
Even in a real plotter that would happen. Oh, definitely you won't see this nice round figures there. Anything else? Okay, if not, assume as the sixth transaction, you sold this 1.5 million. You sold this 1.5 million, whatever the rate, forget about it. Now, what is your position? As the sixth trade, you sold this 1.5 million euros. What is your position?
It's long in dollar.
You can say, but that is that can be long or short. That depends on whether you make a profit or a loss. If you do the transaction at 1.4002, yes, it would be a profit. No, forget about what is the rate that you do, whether you realize a profit or loss. What is your position in euro?
Squared position.
Yes. Once you sell this last 1.5 million euros, in euros net amount would be 0. If you add 1, 2, 3, 4, this 5 and this one, last one, the net amount would be 0. No position in euros. Such a position we call it a square position. You have no exposure to the market. Whatever the exchange rate movements after that, euro dollar exchange rate movements, you don't have to worry about. You don't make a profit or a loss because you don't have any position. We call it a square position. Correct? So is it clear? What does it mean by a square position? You have net off your long position against short positions, so you don't have any exposure to the market in that base currency. So in the profit, we can segregate into as it whether it's a realized profit or unrealized profit. So basically, you get the realized profit once you squared the position. Until such time, based on your open position and the market rate, you will have a unrealized profit or a loss. That is what we call mark to market. We take the market rates and compare with our cost and calculate the profit or loss. But we know that whenever the market rate changes, our profit or loss is changes. So that is unrealized profit or loss. Any question so far?
So are there any other methods we are using for the calculation?
What do you mean?
Like first sell out, the first buy rates or something like that?
No, so there are, yes, you know the inventory control methods, first in, first out, last in, or the FIFO and LIFO, last in, first out.
Yes, sir, that's better.
You can do that, but it is not the now generally accepted method, even according to the accounting standards. For foreign exchange rate, you don't use LIFO or FIFO, but you go by the average rate. So otherwise, you can match. So in this example, you buy this rate, you buy this rate. If you use LIFO, last in, first out, then you have to deduct this 2 million against this 3 million at this rate and calculate the difference between 98, 99, and that is 1 pip. That is the profit that you can do that as well, but now it's not generally accepted. You go by the weighted average method, which is this.
Okay, sir, thank you.
Clear?
Yeah, clear, sir, thank you.
Any other questions? So then shall I start forwards and swaps?
So that's a one doubt.
Sorry?
I have one doubt. After the break, we did a example. So it's not clear. Can you explain it once?
So, sorry, I cannot hear you properly.
After the break, we did a example. Small example. There are 4 calculations.
Yes.
So it's not clear.
You
Lightly. So
mentioned
can
that
you
without
explain again?
in foreign currency, you can start trading. That how that happens?
So I'll answer the second question first. See, in this case, you do all these transactions because all these are spot value transactions. You sell the last $1.5 million that you purchased, sorry, euros that you purchased. So in euros, you don't have any obligation. Everything will be settled in your account, pluses, minuses. So no requirement. Since you have made a $650, it will be credited at the or remain at the end in your dollar account. Only thing is, if you make a loss, there should be sufficient funds in dollars to meet that loss. That means you may have to pay to someone. That's how we do. But however, that depends on the agreement that you have with counterparties, whether you are allowed to do netting transactions or things like that. But if you want to settle each and every transaction on gross basis, then you need some dollars or euros in your account to settle these transactions.
Is it like a margin that you put with your broker?
Sort of, yes. If you do a netting, it's like a margin. So whatever the net amount that you receive, you have to pay, you pay only that. Or if it is a amount that you are to receive, you will receive that amount.
So when you like, do you mark to market these positions daily, and if you don't have sufficient funds, you are getting a margin call? Is that, does it happen?
No. in FX, basically you don't go through any exchange or central counterparty. Still it's over the counter, so therefore it won't work in that way. You have to maintain your balances at your nostro account, corresponding nostro account, and depending on say the nostro agent, whether they'll allow you, by seeing this, all these transactions are going through your transaction and they see a net amount of plus, so they may allow you to start with zero. That depends on the, practically that depends on the agreement that you have with nostro agent. So nostro agent, so say for the first transaction, nostro agent has to pay $1.39 million. The nostro agent will pay it on behalf of you, seeing in that there are inflows to you. If they don't do that, then you have to provide sufficient funds in your account. And basically, from the risk perspective, better to keep that amount in your account, otherwise there will be settlement failures. If when you sell, or if any inflows won't come into your account, then you will fall into a trouble that you are not in a sufficient to pay other parties. So that would happen.
So when like this settles after 2 days, right? So within 2 days, you have to have that money in your account.
In your account, yes.
So what happens if it doesn't get settled? Like you get a charge or fine?
Yes, definitely. That depends. Again, that depends on the agreement of with your nostro account. Some nostro agents, they allow you to overdraft up to some extent. So they will settle the transaction. Then they will charge you that OD charges. Or if that facility is not available, the trade will fail. Then the other party will charge you. They will charge for the compensation for the failed transaction. That would happen.
Thanks.
Okay, if I go back to the other first question, so still luckily I haven't deleted that. It's there in the board. You can see it. These are the calculation I've done. So first transaction, you buy euro against dollar at 1.2117. What is the, so you buy euro 1 million, then what is the amount of dollars that you need to buy that? For a 1 euro, you have to pay 1.2117. So then for 1 million euros, what is the amount that you have to pay? 1 million euro into 1.2117. So the total amount is 1,211,700 dollars. Is it clear?
Yes, it's clear. My question is why in the second example we are not multiplying
So
US.
Okay, simple. 1 euro equals 1.2117, sorry, 2119 US dollars. You need 1 million US dollars. What's the value in euros? How do you get that?
Since it's higher than the dollar price, we have to divide it to get the correct euro amount, right, sir?
Okay. If I write it, I delete this part. You need 1 million USD. What is the amount of AUD you need? Someone said that since this is high, you divide. So here, this is low. What do you do?
So if it is the counter currency, we have to divide. If it is the base currency, we have to multiply.
Why? That's the problem. You don't connect the dots. 1 euro equals $1.2119. Now you want to find the value of $1 million in euros. What do you do?
Say at this is when
What is the value of $1 in euros? What is the value of $1 in euros?
that is the easiest way.
Huh?
That is the easiest way. First, you have to find out $1 how much euro will cost.
Yes. So that
Euro
is
will be that is multiplied by
1.2119. What is this?
That is euros amount.
That's what we learn, reciprocal. Now you know what's the value of $1 in terms of euro. Then what's the value of $1 million in euros?
That multiplied by 1 million.
This one, you multiply it by 1 million. So it's basically 1 million divided by 2119. So whether it's a large number or a small number, it doesn't matter. This is the concept. So this is grade 7-8 mathematics, isn't it? As I inform you, so as I told you last week, you have done a lot of sums whenever you are in grade 6 or 7 or 8 maybe. So price of a book is this much, price of a pen is this much, then how many pens you can buy at a price of a book or something like that. Have you done? I don't know, I have done whenever I was at grade 6 or 7, maybe 7 or 8. So same thing, don't think too much, go back to the basics, common sense. Is it clear now? Is it clear?
Yes, sir.
Yes.
So, but you prefer to remember it as rules. So as someone told, if the amount is in counter currency, you can divide. Get the idea. What does it mean by the exchange rate? Value of one unit in another currency. 1 equals this. So you can do whatever after that. Anything else? Did I answer that question?
Yes, sir. The thing is, we have to decide if we see the question whether you have to divide or to multiply. You have to remind it. You have to remember it.
No need to remember. When I don't do that, I just go by the fundamentals. If you know 1 euro equals 1.2117 USDs, to get the value of 10 million USDs, what to do? This is the value of euro in terms of dollars. You need 10 million dollars in euros. So first thing you need to find what is the value of a dollar in euros. If you know value of $1 in euros, then you can find any amount. It may be 500,000, 4.8 million. It doesn't matter. So if it is other way around, if $1 equals 80.30 JPY, what does it mean? Very simple arithmetic. No rocket science, nothing. You know $1 is 80.30 JPY, then on the other hand, what you did, what's the value of yen in terms of dollars? So it is 1 over 80.30. That's why we discuss reciprocal. You know, if I ask you to calculate the reciprocal, you will do that. That's why, but you don't know to apply it. So that's why I said that you don't connect the dots. So whatever the concepts that we learn, you should be able to use it in somewhere else. Those won't come standalone. Now you can find the value of 10 million JPY in dollars. Isn't it? Only thing is, don't do this calculation in the calculator and write it as 0.000 something. Don't do that. Keep it as it is. And with the big number, once you multiply them, it will give you a much accurate figure. If you do this calculation and round off it at the 4th decimal place or somewhere there, you won't get the accurate answer because you dropped many decimals at the end. But when you multiplied it by amount like this 10 million or billions, that matters. So therefore my advice is don't perform the calculation. Just keep it as it is. This is the concept that you have to understand. That's the concept behind that calculation. Anything else? Don't think too much. Whenever the rate and amount is given, don't think whether it's a direct quote or indirect quote or whether I am a market taker or a market maker. No need. Whether it's a market taker or market maker, the final amount should be the same. Otherwise, how can you settle the transaction? Market taker expect another one amount and market maker is expecting another amount. You can't mention it. Whether it's a market maker or a market taker, whether you are a buyer or a seller, both amount should be the same. If it is euro 1 million, for both parties, it's euro 1 million. Depending on the rate that you agree, whether it's a $1.2 million or $1.3 million, it should be the same for both parties. So nothing to do with those. Once you agreed the rate, you don't want to worry about whether it's a direct quote, indirect quote, whether base currency is stronger than the counter currency or the counter currency is stronger than the base currency. Nothing. The rate and the amount. That's all applicable. Any questions?
Sir, can you explain the electronic trading platform again? Like Bloomberg.
This one. Is this one you want?
I can't see it.
Huh?
Yeah, Bloomberg platform. I can't see the slide yet.
But you should be able to see it now. Can others see it?
Yes, sir.
Yes, sir.
Okay. Now tell me what's the problem you have with this, or what you cannot understand. Can you see this?
That buying rate and selling rate.
So buying rate and selling rate.
Still coming.
Buying rate and selling rate, whether it's an electronic platform or not, it won't be different. At the bid, as a market taker, you sell the base currency. At the offer, as a market taker, you buy the base currency. That definition or the basic remains same. Whether it's through the electronic platform or through voice, or that means telephone or a chat sort of a trading platform, wherever, as a market taker, you sell at the bid, you buy at the offer, the base currency. That concept remains same. And this screen, so that sell euro, buy euro, sell GBP, buy GBP, that is given for you to easily recognize it. Now even you don't want to worry about with this electronic trading, and you can see the full exchange rate applicable, whether you sell at this side or buy side, everything is given as a market taker. So whenever you see this, you know, as a market taker, what are you doing? If you click on this figure, you are selling. If you click on this figure, you are buying. Straightforward, very easy. What else? And other thing is, you can see different currency pairs in this my screen. One to
So when you click that top bottom, who going to buy or who going to sell? How do it identify?
if you click on the sell side, you are selling.
Sir?
If you click on the sell side, so the bid, that means you are selling. If you click on the buy side, you are buying. Is it clear?
Yeah.
Say if you click on this say GBP USD 1.6723, this sell.
Yes.
You click
When
on
you
this
check
one.
that on the best trade, who going to sell or who going to buy it? How do you select it?
So that depends what you are doing. If you click on this trade, you are selling. If you click on this trade, you are buying. You decide it, whether you are buying or a seller. Then the other party is in the opposite side.
So in this case, can we select a party like?
Yes. So no. In this case,
to whom you are selling?
Say you want to sell sterling. Best rate is 6723. Either you can click on this cell at the top row. If you click on that, it will be executed either with the HSBC or Standard Chartered. You don't know. The system will pick the party, and there may be an algorithm in the system, maybe based on the timing of the price quotation and things like that. So it will give you give the priority. If you click on this cell, it will execute against HSBC or the Standard Chartered. You don't mind. That's why you click on this cell, because both are eligible parties for you. You don't mind with which party the trade is going to execute. Once you click, the trade will execute, and there will be a message in your message box about the deal ticket. You get the information. The amount you sell sterling 1 million against dollar at 1.6723. The spot settlement date on 6th June 2014, and the counterparty name. So you will get that. But if you want to trade with HSBC, then you have to click on this at the front of that counterparty name. You have to click on. If you want to trade with Standard Chartered, you have to click here. So you don't worry about, so this, even though this is the best trade, you don't want to trade with HSBC or Standard Chartered for some reason. You want to trade with Credit Suisse, just click on this price. Till you can do that. But there will be audit trail showing that these were the codes provided, and this is the trade that you entered. Someone can question, why didn't you go for the best trade, and why did you trade at this rate? Something like that. That can happen. And as a trader, if you want to make a profit, you don't go with any of these parties when you have the best price. Is it clear? How to select the counterparty?
do we have to request for quote from the
So-
other party?
Sorry.
Do we have to request
No,
quotes from the other party
No,
for 1
in this
million
case,
too?
so all the parties are giving quotes. See, now you have set it up as for 1
For
million.
1 million.
All these
Everybody.
1, 2, 3, 4,
The other
5,
party is also quoting for
1,
1
2,
million, right?
3, 4, 5, 6, 7, 8, 9. There are 9 parties. All 9 parties are quoting for 1 million. This amount is for this RF.
If it's a lesser, if it's a lesser amount, we can change the amount then, no?
Whatever the amount you need, you have to change this amount. Then all the parties will quote at that price.
All right,
So
okay.
say if you want to do a not on spot basis or some different thing, in that you can click this RFQ, then it will prompt you a separate window. RFQ means request for quote. Then you can put your whatever your requirement and send it. It will go to these parties and they will send you a special quote for that. These are the prices quote for basically for any party. If you send an RFQ, they see that you are asking for a price, and depending on the relationship, you may get a better price than this. That can.
Okay, thanks.
Anything else? Is it clear about this electronic trading platform? And these features may slightly vary from platform to platform. You have to be familiar with the platform you are going to trade. Any other question? So if you don't have any questions, we'll stop here, and next week we'll start with FX forwards and swaps. Is it okay?